Welcome back to your favorite comedy finance channel. Don't forget to like, share, subscribe. So let me kind of go over just a few different things real quick. I know that everybody is very bullish on the committee and all this sort of stuff with the U.S. government backing crypto, but right now it's just in study mode, and nothing has necessarily been signed just yet. One thing I do want to tell you is overall, when you take a look at what's happening in the markets, it's really not that bullish. But there's a lot of catalysts that could happen that could change the landscape for what it looks like right now. Trump does want a weaker dollar. Will the Fed listen to him on the 27th? I don't know. But I remember around the second week of December, I was telling you guys, look, it's probably going to be boring between the 20th and the 27th until we actually see what's going to happen with the Fed. We have a full week of news coming out today. We did get some housing numbers, but again, it's going back to the CPI rhetoric that we had last time. They went and they said, well, the numbers, aren't really good, but it's better than what our expectations were, and that's why the markets should be bullish. And I kind of feel like this is what they're going to do with every report from here. They're going to make things sound better. GDP reports are supposed to come out this week too. CPI reports are supposed to come out after the Fed meeting this time, which is really weird to me. Usually you have reports coming out before the Fed meeting, and this time it's kind of like they're going to do the Fed meeting before all these reports come out. So, last CPI report, people tried to say, well, we had expectations that CPI was going to go up, but it didn't go up as high as we thought, which is good, right? Whatever. So they try to spin that over 3% inflation was okay. And CPI is clearly going to go higher this next report comes out. So, we'll see how they try to spin everything. Trump did seem very confident that Jerome Powell would listen. So we'll see how that goes. Now, keep in mind, I'm still bullish overall on the crypto market because a lot of people are exiting stocks. A lot of people are exiting different markets just to get into crypto. And obviously, since Congress cannot trade stocks anymore, they're probably going to come to the crypto sector. So they're probably going to make that pathway for the government to come in. And a lot of people are saying, well, when's retail going to come? Well, retail is too poor. Retail, the economy right now might as well be in a depression. Every report that's come out has not been a good report. The economy is definitely in recession mode, but from here, it's all about what the next catalyst is going to be that's going to send assets higher. And that's going to be when the CPI starts showing that it's going higher and higher, which will lead other investors, like people in the bond market, to exit their positions to get into these risk on assets to avoid the cost of inflation. So we'll end up seeing how that goes. Now, I am still bullish on ARC Block ABT, Stater SD, and also DIA, Dragonchain, and MYC. I'm always going to be a store value for ETH. But again, I'm very bullish on these coins because I've already had, a lot of you guys have maybe 10, 20 picks, or you've gone through the 10, 20 picks where you're flipping around, you guys have already built up this capital to where you're going up six figures, or you're about to go seven figures, or whatever the case. Now more than ever is the time to consolidate those 50 picks that you got, let's say, down to 5 or under 10, something like that. And you're going to be kicking yourself in the ass because right now it's time for concentration. Right now it's time for high concentration, extreme consolidation. And a lot of people think, well, when you spread out, when you spread out, you're lowering your risk, but you're actually making the risk higher, because a lot of these coins are just fluff coins. You don't really care about them. There's some quick narrative that you have for them, but they're not really something you're going to hold forever. So, it's like I was talking to people today about XRP. Is it a good store of value? Yeah, if you want to do that, slow growth. But for a lot of those XRP kids, they're watching the XRPL, they're partnered with Chainlink, but for whatever reason, they pick DIA, their Oracle, to run on the XRPL. So, you're watching a lot of what Chainlink can't do, DIA picks up that job. And it's going to continue doing that with multiple ecosystems. So that's why I'm really trying to harp on this multi-chain narrative, because that's what the sector needs. And I always tell people, it's like, when it comes to making a call, you're not making a call because it's going to go up because you made the call, right? What makes you a caller is calling something before it happens. If you're a caller that only calls things and it surges up and it goes down all the time, because that's what your audience is used to, clearly they just want to pump and dump or whatever, then that's what you are, a pump and dump artist. If you're making calls all the time and every call is just a quick surge and then it disappears, then it's just pump and dump. But with utility calls, you have to think a little bit further into the future about what the sector is actually going to need. And what the sector needs now more than ever is multi-chain. And multi-chain is going to offer a lot of different services to a lot of these companies and businesses, or these government institutions. It's going to offer them the solutions that they're looking for. I don't think the surge or like the bull market per se, like let's say the high multipliers that we're waiting for, is going to come from retail. I think retail is getting rinsed in meme coins. It's funny because a lot of people, they'll sit there and be like, oh man, well, Dion, he called this meme coin, didn't do too well. Well, no fucking shit. Meme coins, there's really no such thing as a call. It's going to be zero or the moon. So, it's, if you have high expectations for a meme coin, then, you're really in the wrong business. But anyways, going back to utility coins, I do want to harp on the fact that we need to consolidate everything into like the solid high conviction plays at this time. Besides that, you remember how like a lot of people are bringing up like US based companies, which is cool, right? Dragonchain, MYC, ArcBlock, NCT is another American company. These are cool, right? Really cool. But like, even though there's an emphasis, again, the committee is in study mode. Nothing's been bought, nothing's been signed off on. And the only way that we're going to see big pumps from the government is if a bill gets passed, and we see Trump sign it. Right now we're in committee mode. So we're going to study. We're studying the crypto reserve, stockpile. That's what we're studying. But nothing's been signed off on. And on top of that, with the zero gains or zero tax capital gains on US based companies, nothing's been signed yet. This is not going to somehow alleviate you from your 2023 or 2024 taxes. Like, nothing's happened yet. It's a lot of talk right now. And we could feel the gear up happening. Like, we could see that things are about to happen, but nothing's happening yet. So, I do want to try to push the brakes on a lot of you guys where it's like, oh, well, we've been here so long. And granted, a lot of you guys have already done really well, but like at the same time, you have to press the brakes when nothing's happening yet. You can't just go based off of crypto Twitter narrative. Crypto Twitter narrative is like the shittiest you could ever do. Okay. It's fucking retarded most of the time because everything is fake. Same thing with YouTube. There's people with X amount of subscribers, X amount of likes, X amount of views, X amount of followers, but it's all fake. If you're in the digital industry, you're going to need to know that there's that 99% of everything is fake numbers, botted numbers. And the reason why a lot of these podcasters do this is because they want to make you feel like there is 30 or 50,000 people watching. Therefore, that many people are going to buy whatever they're talking about. Meanwhile, it's only maybe 5,000 people watching. Same thing on Twitter. You think that they have all this algorithm, right? Like, I was taking a look at Mario's coin that came out. ATH was 75 million, and he has all the broadcasting, right? All the broadcasting in the world, 17,000 wallet holders, and he went to 75 million market cap, and it fucking crashed to damn near zero already. But MYC, we launched over a year ago, And the ATH was 53 million market cap with under 1,000 holders and barely any volume. And speaking of which, most of the time, if not 100% of the time, volume is fake. It's fake on the DEX. It's really fake on the centralized exchanges. They could tone up or down the volume depending on what's going on. So a lot of times when people are trying to talk to me about some sort of indicator, they're like, well, you know, SD and DIA are really good picks, but the volume's kind of low. Well, no fucking shit. It's all fake. Anyways, you really think that people are constantly trading that much? No, they're not. They buy shit and they hold it, or they buy shit and they send it out. But in order to make that chart move, you're gonna need those market makers, and that's why they're there. In fact, in order for you to get on the exchange, you need to have X amount of market makers there to produce the volume to keep you qualified to stay on that exchange. And this is what a lot of people don't get. So when you join MYC, you join ODAP. Okay, it's on Apple and Google stores. One thing that a lot of people tell me is like, you're never going to see the sector the same way again because all the bullshit just goes away. Because I'm not going to lie to you. I'm not going to fluff your ears or pretend that numbers are something that they're not. Okay, because people think that a project's or people think an audience is really going to make or break a particular project because it's being spoken about by a podcaster or whatever the case. This is bullshit. Good projects are going to do good because they're good projects. Okay. Mario had all the algorithm in the world for 75 million ATH, right? He had all the algorithm in the world. Okay. MYC in the small little corner that we have did 50 million market cap with less holders, literally 17x less holders. So who's lying? Not me. I'm not lying. There's no reason for me to make fake views, fake subscribers, fake this, fake that. And that's the biggest issue. And I think eventually this is going to become a bigger problem, or there's going to be, well, digital ID will fix this at some point where you're not going to have robots pretending to be accounts anymore. Like we're going to get to a point in time where you're not going to be able to fake your numbers anymore. And hopefully, I'm pretty sure it'll happen. I mean, it started happening on Twitter where a lot of people started seeing some of their follower accounts go down because Twitter kept deleting some of the accounts that were fake. And this is going to get more sophisticated, clearly. This is going to get sophisticated to the point where there's not going to be no fake accounts. You're only going to see the exact amount of humans that are online. Right now it's a bunch of bullshit. So, try to keep that in mind when you're taking a look at different numbers. I do want you guys to think outside the box a little bit, where you're not getting programmed so much. If you're going to be in this industry or you're going to be in crypto, you're going to need to know what's fake. And the majority of it is fake. So you have to realize that. You definitely have to know how to vet through a coin, or you need to vet the contract. You need to learn how to use the different explorers. There's a lot of different things to learn, and it's going to be a learning curve. But ultimately, you're going to need to know these things so that way you're not like sauced for no reason. Okay. I don't know if you guys have ever seen like somebody have like 50K views or something and the ticker doesn't move. You know what I'm saying? So, that's something I do want to put across to you guys. I'm very bullish on Stater, SD, DIA, ARC Block, Dragonchain, MYC, ETH. Okay, I'm going to stick to those. Those are my 5. ETH I don't count because it's like a store value. And mind you, Trump has bought more ETH than Bitcoin. So, and it's because I feel like, it goes back to programmability. What makes me mad about this sector, this goes back to the XRP kids or the CASHAPP kids. It all goes back to programmability. If your blockchain is a 1.0 chain, it has a certain level of programmability, and it's never going to be more. It's never going to be less. But the sauce of PR has people thinking that they know more than you, and they're like, oh, well, it's so popular. Everyone really likes it. So clearly this is the next best thing, but it's not a 2.0 chain, and it's not going to be a 3.0 chain. See, the future is going to move 3.0. 2.0 right now, it's going to cater to a lot of different things, but as those things are being catered to, a lot of people, a lot of those builders are going to start seeing all the dead ends, all the stop signs that they can't build more or they can't connect more. There's not enough interoperability. So that's why I always try to focus on 3.0 projects that offer multi-chain abilities, okay? That's going to be the future, because the future is interoperability. The future is not just, having trading pairs. Having trading pairs is not interoperability, okay? You're going to want to have projects that could interconnect or be blockchain agnostic for everybody, so they could service provide to anybody, not just themselves. This is why I always tell people, it's like, you want to look at these projects in a way where you see what they need, or what the sector is actually going to end up needing. And I do feel like we're going to get a lot more influx, not from retail. Retail is broke, okay? Retail is rinsed out by probably meme coins, and most of the time, less than 10% of people are winning, okay? Most of the people that are winning are the callers first, and then it goes maybe a little bit after, but not that many people win in meme coins. Like I said, you're either gonna win or you're gonna go to zero with memes. But I do think that the majority of the money is going to come from major influxes from companies, governments that are going to need to use the programmability of 2.0 chains or 3.0 chains. So that's why I've always harped on Dragonchain, Arc Block. Now I'm harping on Stater, SD, and Dia. And I was talking to the XRP kids earlier today. I was like, you guys want to make so much money. You want to make your 100x, 150x, then you should be buying Dia. Dia is picking up every job Chainlink cannot do. Ripple partnered with Chainlink, but they end up hiring Dia to run the XRPL for integration. So, you're watching these 3.0 projects pick up the job that these old projects can't do. Like, you guys remember when Chainlink was there, and then they said, oh, well, Chainlink 2.0 is here. And it was nothing. It literally was like just an extra feature here and there, but it had nothing to do with the chain itself. That's why I say it's like, if something's on a particular chain, it's only going to be as much as it is that day. Like the day it was produced, it cannot do more, it cannot do less, because it's already fixated. It's done. Okay. Unless the contract's open, but like, again, if the smart contract is open, there's only so much you could change. There's only so much a 2.0 chain can do. So, that's why when you're looking at these 3.0 chains that are blockchain agnostic, that you could customize them to interoperate with these other networks versus just one network, that's when you start seeing the future of what the crypto sector is going to be, because that's what we need. We need functionality between all networks. That's what we need. And, you look at the success that Aave had, for instance. Aave was one of the best DeFi projects ever back in the day, right? Best DeFi project ever. But it only catered to one ecosystem. It could only mess with one ecosystem. Now we got Stater SD. It could play with almost any network out there. It could play with multiple networks. So if you saw Aave go 8 billion in market cap, only playing with one ecosystem, what do you think a project that's getting multiple ecosystem is going to produce when it comes down to revenue plus market cap? You're going to be taking a look at 8 to 15 billion market cap companies. So, that's why a lot of people want, see, what sucks about a lot of poor people is they look at a penny pick or they look at a decimal pick, but they're not looking at the deal. They're not looking at the market cap. They just say, well, if I can get a penny, if I can get it for a penny, then it's a good deal. If I can get it for a decimal, I'm getting it cheaper. No, you're not. You're paying more money because the market cap's already 600 million, 800 million. It's already 3 billion, and you're buying it because, oh, well, you know what? At least I'm getting it for a penny, but you're not getting a good deal. And for me, for instance, when it comes to a broadcaster, let's say if somebody is let's say if somebody's perma bull, marketing a particular project, right? You're putting all this work into a company that's only going to give you X amount of return for billions in market cap. So who's winning? Is the audience winning? No, not really. The project is winning more than the retail investor. So, for me, whenever I'm looking at projects, I'm taking a look at the market cap. And most of the time, people, they'll take a look at, like, let's say a pick like State or SD or DIA or Arc Block right now. They'll say, oh, well, it's $1. So, I could get this other pick that's for the decimals. You're not getting a better deal because the market cap is probably higher than what these are. But that's how you see the opportunity that's before you. A lot of you guys, this is obviously your first cycle and you've never bought something for $1 and you never saw it go fucking $50 plus or $100 plus. Well, DIA, SD, and ABT, those are going to be picks that you're going to see go from $1 to 81.50. Okay. And these are not big numbers. Okay. And a lot of people will say, well, these are kind of moon boy type prices, but it's like, how is it moon boy price based on the tokenomics? Look at the tokenomics. The tokenomics are showing you 10 to 15, well, actually $10 to $25 per 1 billion market cap. I bet you right now, you got peanut money, like literally peanut money, hoping for gains in these coins that are multiple billion in market cap, and you think you're getting a good deal because it's 25 cents. You're not going to get the growth you're looking for. So that's why I tell you guys, better to harp on these mega projects. Yeah, they're more expensive in price per se from a visual standpoint, but if you look at the tokenomics, you take a look at the market cap, you're seeing that you're going to be one of the first adopters of that project. Okay, you're going to see it before everyone else does. If the coin is already 3 billion, 4 billion market cap, you're not the first adopter. You're late. You're already late. So for right now, I've been DCAing in Stater, I've been DCAing in SD, I've been collecting ABT, and I regret selling so much ABT in the beginning because, I was like, man, I should have, held a little bit more, whatever. But like, there were so many different plays going on, but I'm rebuilding that stack. But again, like, don't stop producing to the point where you don't want to add to your stack anymore. Like, the most annoying people in the crypto sector are always people that, like, they probably don't got a job. You know what I mean? Like, they don't have a job or something. And because they don't have a job, they're not adding to their stack. So the time bracket between the chop that we go through, they're just bitching the whole time. Or, they think that everything is just dying out so horribly. And it's just like, dude, we're like, call was here, we're X is up, and the ATH, okay, yeah, from the ATH, we're down 30, 40% or whatever, but what does that matter? Your bottom is still rising. So like, a lot of people are so like one track minded where they only look at what's happening today versus what the entire experience is going to be. If you got into a pick 30, 40 cents, 50 cents, or $1, what does it matter if it's going between 80 cents to 120 to 150 to $2, $3? I view things in multipliers. I don't view things by the price. I view things by the multiplier. Going up, going down, doesn't matter. And that's what keeps me more focused as to what type of fluctuation I'm actually looking at. Am I really looking at a crash? No. I'm looking at bottoms rising. That's what I'm looking at. And every pick that we have is that. So, don't get so fixated on the price. Take a look at your entry and then try to measure things out by the multiplier. You see what I'm saying? Now, keep in mind, like, I know there's a lot of things going on with meme coins, but it's like, there's only so much you could really do. There's a couple coins out there that you could do okay with, but it's just like, I don't know if I'm not retarded enough, I don't know if I'm like, maybe I should be like more of a pump and dumper or something like that, to get more interested in memes. But like, memes suck because you kind of have to be like if you're a meme coin caller, right? For instance, meme coin callers, maybe they'll get like 2-3 good ones, right? But out of those 2-3 good ones, there's like 50 rugs. and that's just the nature of the business when it comes to meme coins. So it's like, Can you be a meme coin caller? Yeah, but like you're really just shooting in the dark. So with utility coins, it's a lot easier, when it comes to actually knowing what you're doing, because you're like, okay, well, the sector needs this. Okay, the tokenomics are this, market cap is this. I'm there early. It has nothing to do with some sort of hype narrative. It has nothing to do with short-term attention span. See what I'm saying? That makes the pick so good. Because a lot of these meme coins they're so short-lived because it's attention based. Okay, that's why a lot of these guys that are some of the biggest podcasters out there, they had coins go 50 million market cap and then run down to 100K market cap. They had coins go to 75 million market cap and then they end up getting rugged down to 400K market cap. And these are the biggest guys in the sector. Hundreds of thousands of subscribers and views and all sorts of shit, right? So who's fucking lying here? If there was really 20, 30,000 holders, humans, the price would have not caved from 75 million market cap to 600K market cap. Would have never happened like that. And I mean, from what I've seen, it's a lot less. But, again, like this is what I'm talking about. Like, these attention-based calls are so short-lived, and the caller is going to need to make multiple calls a week, maybe one call a week. So what do you think is happening to your portfolio? There's going to be a lot of fluctuation. There's going to be a lot of rugging going on. So, instead of you losing so much of that capital, it's time to focus up and then hit these utility coins before the red tape gets cut, because the red tape will get cut. Trump's already working on red tape being cut. So that's why I say I don't think the retail, retail is so stupid. They buy a lot of memes, and that's why they get rugged. But retail is not what's going to surge the utility market. Okay, because as you see what like, let's say I forget the exact name, but like World Liberty Finance, I think is what it's called or whatever. Anyway, Trump. It's like a project that they're going to launch at some point on ETH, and they're buying everything but XRP. But again, like this is an example of them buying things that are usable. And they bought TRX, they bought ETH, they bought a lot of other projects that offer a service. And this is just one example of one entity buying up stuff. I mean, you take a look at BlackRock; they're buying some really good utility projects. I don't know if I'm ever gonna get past like them owning like SPX. You know what I mean? Like, I don't think I'm ever gonna get into it where I take memes as serious as they want us to, because I could tell they want us to take memes so seriously. And I just can't. I really just can't. Ondo is a good company, but it's just a bad deal for me. It's a bad deal for the entry. It's a bad deal for the market cap. It's a bad deal for the tokenomics. So, if I had 100 grand in Ondo, I would rug that and put it straight into Stater, SD, or DIA, or I would put it into ABT. Like a lot of people, Ondo is a good project. Don't get me wrong, but it's like, I don't give a fuck if like a project's a good project or not. I want to make money. So if I'm going to be getting into Ondo, I'm going to look at my entry. I'm going to look at the tokenomics and match it up to the market cap. And I'm like, how is this a good deal for me? So it's going to take 20 billion market cap for you to get fucking like what, 3, 4x, 5x? Like, are you fucking here for that? Not me. Take a look at the time lock, the TVL. Take a look at the TVL on Stater SD, for instance. It's like 800 million. There's literally queers right now that are bull posting about like Moonwell, Ondo, fucking, I forget, there was another company that had a high TVL. If you guys, we were just talking about it. Anyways, there's a variety of companies that have high TVLs that are like 500 million, 600 million, or they're $1 billion or whatever the fuck, right? And their market caps are like 3, 4 billion plus. Okay. Like the market caps are in the billions already, and their TVLs are 500 million or just under $1 billion TVL. Stater SD is under 100 million market cap with 800 million TVL. So do you see the opportunity that's going to happen? So it's not going to be Moon Boy. It is going to go 3-4 digits. You know, these are it's like buying Aave on roids, you know, before it starts collecting a lot of this business, because it's catering to multiple networks for liquid staking, and that's going to be a big deal. And that's why I'm like, you know, if you take a look at the TVL on these companies that are, you know, let's say Ondo is very popular, and you take a look at the stats, you're not really getting a good deal, but it's like, oh, but everyone likes it, you know, everyone likes it. A lot of people that have good algorithm like it, you know, so I like it too, you know, and it's just like, yeah, it's a good project, but it's like, are you going to really make money on that? No, you're probably not. You're not going to make that much money on it. For how much work the community has to do to push that market cap, is it worth that deal? No. Like, why the fuck am I gonna, you know, give somebody 10-20 billion dollars worth of a market cap and I'm gonna get 5x back? It's like the XRP kids, you know. XRP kids are, you know, they'll sit there and they'll say, well, you know, this is such a popular pick, it's a good pick, banker's pick, it has all these different bullish things tied to it. But what does that matter if you're not making any money? Like, literally, I think the cheapest it was this cycle was 40 cents, let's say. I think it was. And it's at what, $3 now? I don't know. 3 divided by 0.40. So for 2.5 years of you jerking off to XRP, you would have got 7.5x. It's so popular. It's in the billions in market cap. You would have got a total of 7.5x. Okay. We've already gone through, I don't know how many 20, 30x's. I don't know how many like 5 to 10x picks. We've already gone over one pick that's already 80x up. So it's like, what is the point of fucking with these companies that are not going to pay you the return that you're looking for? You know, if it's just a store of value and you don't really anticipate high gains, you're just trying to like store it somewhere, then like I get it. But, you know, even then it's like, I want to do things that are going to pay me, you know. I remember when I went on a few mainstream media podcasts, I went on a few mainstream media podcaster live streams before, and I was talking about Dragonchain, and everybody was talking so much shit about Dragonchain. So much shit. They're like, oh, that is like the worst call. Like, how is that even going to happen? And it's just like, okay, well, now it's happening. You know, they had a case today, but like, it wasn't like the trial or anything. It wasn't like anything. Like, it was just like a meetup basically, and they're going to schedule when the next appearance is going to be or when the next course of business is going to be. But at the end of the day, they actually have a better narrative and a better legal standpoint than XRP did. You know what I mean? So, you know, and it's multi-chain. Dragonchain was actually very ahead of its time. Like it's a multi-chain project. Okay. It could, and you could code in any language on it. Like there's actually a lot of cool things about Dragonchain that a lot of people don't know about it. But I do think it's going to be one of these companies that are going to be liberated, because, you know, if Ripple got liberated, then there's going to be a lot of other US companies that are going to get liberated, and they're going to get the support they need from the government and institutions and what have you. So that's going to be really good for that company. Now I'll keep up with that. So LCX fucking sucks, to be honest. Like, we made 10x on it. You know, I should have made more money on that coin. But, you know, Monty kind of pissed me off. That community pissed me off. Like, first off, they lied. Okay. They sit there and say they're not going to move funds. They end up moving funds. Okay. So whatever, you know, Start seeing them send fucking tokens to exchanges. They're selling coins. Okay, whatever. I was fine with that. It's like, whatever, dude, you know. But what really fucked me up was the fact that they were like, oh, we're not going to migrate. We have no plans to migrate, you know. But all day on Telegram, and they've advertised this. It wasn't like we heard it once. We heard it 3 times that they wanted to create their own blockchain. Well, if that's the case, you're not going to remain at ERC20, are you? So why the fuck am I going to hold hundreds of thousands of dollars in your token and hope for the best? Or even worse, hope to God that I'm here to listen to the announcement of when this new chain goes online. So, you know, to me, it's too much risk. It's the same type of story with Math Token. Like LC, like, don't get me wrong, look, LCX, good project, has the right narratives, blah, blah, blah. Math Token, very good, you know, had the right narrative, you know, all this stuff. But it's like, when you know the plan is to create a new chain, a new token, okay? And I'm not saying like for instance, let's say if LCX came out and they said, all right, well, or any company, let's say they come out and they say, well, we want to make a new token featuring this product or service. That's fine. I don't care. That's okay. But when I know you're going to make another coin and it's the same company, it's the same brand, it's like the same thing, that's when I'm like, this shit over here is going to get rubbed. And like, there's no point to be there. So, and keep in mind, LCX has all the PR, has all this stuff, you know, like I'm not a fan of it. I don't like the way it's being ran. Do I think it'll be successful in the long run? Yeah, absolutely. But it is fucking stupid that they sat there and lied to everybody and then tried to talk shit on me as if I was making this up. Like, this wasn't my story. Okay. Like, I didn't come out of nowhere saying, oh, they want to make a new blockchain. No, you guys said that. And that's what fucking got everybody. Okay. Moonwell is a good company. Arrow, another good company. Again, like, look at Moonwell TVL, look at Arrow TVL. Why the fuck are you buying those stupid ass coins when you could be buying State or SD for under 100 million market cap with 800 million TVL? You see, it's not meth, it's math. Okay. So, like, yes, Arrow and Moonwell are very good companies, but are you going to really make the money you're looking for? No. Am I saying that you're not going to get multipliers? No, I'm not saying that. I'm just saying you're not going to get enough multipliers for me to join you on that journey. See, for me, I'm not going to join you on any journey to hold a coin unless the multipliers are there for me to go be there. But if I'm looking at holding something and waiting for it to go 5, 10, 20 billion plus on market cap for me to get a 5, 10x, I'm not going to fucking be there. You know, that's my point, you know? But, and again, there's nothing wrong with these projects, but the thing is, like, people are so fucking retarded. Like, they really like get so obsessed with the brand versus what the fuck we're here for. Like, I don't get it. Like, I don't get it. Like, it is the stupidest shit in the world to me, where you get these people that are so tribal about a brand. And it's like, I thought we were here to make fucking 100x, 50x, but we're going to get sauced by a heavily algorithm coin that's already in the billions in market cap. That's not going to give you 100x. We're going to just jerk off for the 5, 10x here and wait a year for it. Like, think about how many queers bought XRP at 40 cents and then waited 2.5 years for 7.5x. Imagine. And I'm sure it's a lot of you wieners, but again, this is what I'm talking about. Like, I'm not here to worship a brand. I'm here to make stupid ass gains on high ass multipliers. That's why we're here. Are you guys here to worship a brand? No, you're not. You're here to make money, right? That's what you're here for. So do the math, do the research, Look at the fucking website for once, okay? Fucking some of you motherfuckers, I swear to God, don't want to look at a goddamn website. But, you know, take a look at the different tokenomics, the market caps, the TVLs, and then compare them to some of those those popular picks out there that got those high TVLs, and they don't have the juice there and multipliers for you to make. White Glove says he's a wiener, but you know, again, there's nothing wrong with any of these picks. Okay, I'm not here to say that they're like, you know, I just want to make a lot of money, and you know, that's just how I am. So, you know, guys, I think I might break these ones back out. You know what I mean? I'm gonna have to break them back out because some of you motherfuckers, I just don't get it. I just don't get it. I really don't get it. I'm just kidding. I don't feel like wearing glasses right now. Yes, absolutely. You know, do take a look at the websites of Stater SD and Dia. Those are going to be mega bangers, man. They're going to cater to multiple ecosystems. You got both Polygon both Polygon founders are backing Stater. You have the first Bitcoin fund that ever, like, it was like the first capital firm is backing them. Dia, the people that funded Chainlink, fund Dia, and then lo and behold, Dia is picking up every job that Chainlink can get. So as you guys are like taking a look at Chainlink get a partnership, somehow, some way, you start to see Dia get involved because they don't offer the service for that chain. You see what's happening? 3.0, multi-chain, it's all coming. It's all coming. And when the red tape gets cut, and all these companies are looking for the best projects to service multiple ecosystems, because think about it. If your coin or if your service caters to this eco, like Solana, Bitcoin, and ETH, all those networks are communities. All those networks have communities. All those networks have audience, or they have people, right? So instead of me only trying to get money or target one ecosystem of people, you're getting multiple networks of people that need the service of only one project. So that's why Stater SD and Dia are going to be really huge. So good example. I like I don't know what market cap Moonwell. I haven't looked at it in a long time. Moonwell is 100 million market cap plus, and it only has 100 million TVL. Stater 50 million market cap, 700 million TVL. See, the math is right there. The math is right there. The math is there. See, you know, sometimes I really want to be just like you little fairies. Sometimes I really want to just open the can of worms and just be like, you know what? To make a point, I'm going to dial up some buttons and then show you guys that I could get 50K subscribers out of nowhere. And then show you I could get X amount of views out of nowhere. Like, there's literally like, you could go on Google right now and you could buy X amount of subscribers, X amount of followers, and all this other dumb shit on Facebook, Instagram, Twitter. And then the retarded audiences out there, they eat this shit up. They're like, oh, this person must be popular. He must know what he's talking about. Oh, he has a lot of audience. This is going to be a big surger then, huh? And then meanwhile, the shit just fucking pump and dumps most of the time, you know. But what do I know? What do I know? You know. But I just think that, you know, being in this industry for so long and you see all the stupid shit people do, and I've never adopted it. You know, like since the beginning, I've never adopted the stupidest shit that people do, whether they're YouTubers or Twitter personalities or whatever the case. Like I never adopted their strategies because it's just so fake. But like, unfortunately, in the crypto sector, the people that do the best are the people that fake the most. If you're really good at faking activity, then you're gonna do good because it's a fake it till you make it industry. That's what it is. Because you'll look at these numbers and you'll misallocate capital. And you know, and I do hope that this gets tackled at some point with AI. I'm sure it will. I'm sure digital ID will fix this as well, where you know you won't have so many fluffed up numbers, botted out numbers, stuff like that. You know, and I want to give you guys the truth. You know what I mean? Like whenever you guys join MYC or OddApp, you know, I always want to make sure that you guys come in, but then, you know, you start realizing all the fake shit. No, you know, I really want people to come into this sector and be educated in such a way where they could see things for what they really are. Because that it's I feel like it should be illegal for people to bot numbers. Because think about it. If you're an audience person and you look at how many people were watching per se, you see 100K people viewing or, you know, whatever, you think that you have a herd behind you and you don't. So because you think you have a herd behind you, you're like, well, let me put in X amount of money because this looks like it really got a lot of attention, a lot of views, right? So think of how much misallocated capital was thrown around the markets over these hoax. Now, it should be illegal. Yeah, Moonwell is literally fucking gay, honestly. It really doesn't have the multipliers that I'm looking for. Like, it's a good company, but it is the gayest thing you could hold because you're not going to make that much money on it. You know, it can you do 5, 10x? Yeah, sure. Whatever. But I want to make 100, 150x. So I'm not going to be involved with it, you know? So there's nothing wrong. I mean, and again, look, there's nothing wrong with liking some of these companies. You know what I'm saying? There's nothing wrong with liking these companies. They are good ones. They're good projects, but you're not going to make the money that you're looking for, you know? And that's why I don't support some of these picks, because it's like, I'm not going to support a pick or call pick because I know it's popular, or because the consensus of the sector likes that pick. For instance, like Ondo. Ondo is a good project, right? Heavy algorithm project. But am I ever going to call it? No, because there's no money there. There's not enough money for me to be there. Is it a good project? Yeah, absolutely. But is there enough money for me? No. So I'm not going to be involved. Same thing with Moonwell. Same thing with Arrow. Good companies, good algorithm, all the attention. But I don't give a fuck about that because I'm here to make money. So I don't care. So, you know, that's why I've consolidated a lot of my picks into ABT, SD, DIA, Dragonchain, MYC, and more ETH. Like, I just stick to those, you know, and it's okay to have more if you want. It's okay. I'm just letting you guys know what I'm doing. But, you know, I've already worked past this part of like where you guys are trying to get like 10, 20 pick portfolios. Like, I feel like that is really detrimental to your growth. I think it's high risk. You know, I feel like when you spread your portfolio out, 20 picks, 15 picks or more, I feel like you're actually making your risk go up, you know, because you can't really pay attention. But yeah, there is, I mean, overall, guys, though, I am bullish. The landscape in the market is horrendous. Okay. You can't ignore that. That's one thing I tell people a lot right now is because it's like, you know, the dollar's really high. We do need a weaker dollar. Rate cuts are not merited. CPI keeps going up. All the numbers look like shit. Every financial report looks horrible, but they're spinning it like it's productive because it's lower than expectations. Well, what the fuck is expectations? Who gives a fuck about expectations? What's the goal? Just because CPI came out lower than expectation doesn't mean that we hit 2%. We didn't hit target. So if we're not hitting target, why are we spinning it as like that it's bullish. So to me, I feel like it's like, trickery, but there's a lot of different things that could change the landscape. So it depends if like Trump really does. It depends if Trump really does have the pool that he says he has. If he has the pool, or granted, Jerome might just cut rates anyway. I mean, Jerome doesn't have to listen to anybody. He's a private entity. He has nothing to do with the U.S. government. And obviously, I mean, if I was him and the president of the United States wanted to cut rates, I would cut rates because my job is to drown countries in debt. So like, the ball's in her court, thankfully, at the expense of the American citizen, of course. So, keep in mind, while you guys are getting rich and all that stuff, okay, a lot of people are getting very poor right now, very poor, and they're going to get more poor. And what's funny is, like, even though inflation is going up, a lot of people think that real estate is going to save them this time, but it really isn't. The real estate market is on the verge of a major collapse. You're not going to be able to make housing affordable through rate cuts, so it's going to need to come from principal. So how are they going to lower principals? Something's got to break. So not to mention the inversion between rental rates and mortgage rates. It's actually more expensive to get a mortgage than it is to rent. And that's when you see that sort of inversion, a lot of people, they'll sit there and say, well, real estate just continues to go up no matter what. And then shit fucking falls apart. And it's not like rates are any better either. Like, I don't think we're ever going to see the, 2-3% again or whatever, but we're still at 6%. Is it really the time to buy? I don't think so. Like, I was taking a look at reports today, and the median price across the country is like $475. And these are for like really not that great of houses. Like, I've seen some nice houses that are $500K. You know what I mean? Like, they're nice. But when I look at them, I'm like, I can't believe you spent $500,000 on this turd, because it's like, you like, put it this way. I don't, all right, in Texas or Florida, California, some of these states, right, you'll see the median price 400, 500K for an okay house, right? And you think this somehow increases your status, and it really doesn't. It's a horrible deal. Because have you guys ever like said, well, I can't, these particular popular states or these states that have higher populations, the prices are a little bit higher or whatever. And you're like, well, it's a nice house, but you still paid like $500,000. Well, like if you went to like, let's say another state that has less population, or it's not as popular as the next one or whatever the case, and you take a look at a 200K house, 300K house, and because it's in the location it's in, it's an even bigger and better house than something you could get for 400K in a place like Florida, Texas, California, or whatever. So, to me, the market is very warped. Your housing is definitely overpriced, and then if you take a look at some of the rental rates out there across the nation, they're already reporting that rental rates are going down. Like, there's a lot of bearish news in that industry. Yeah, exactly. 250K is like a starter house, but like, think about it. Like, if you go, like, let's say that's Florida, let's say, and if you really want an okay house, you're going to be spending 300 to 500K, but some of these emerging markets, like, and this is, I mean, for people that have like these jobs where like they need to go into it, or like there's a particular niche, like, you're fucked. But for people that are working remote, or the people that like have some sort of, like, granted, there's good jobs out there, but like for those people that could work remote and stuff like that, they're going to be the best opportunities for those people, because they could work anywhere. So you can actually move to locations that maybe they're not as favorable, or whatever the case, or they're lower populations, but you're going to get a way better deal, and that's kind of what happened in COVID. Like, when COVID came around, a lot of people were buying homes that were like an hour away from their job because they could work remote. So like, we're going to start seeing a lot more of that as we go further. Now, I do feel at some point that we're going to see bail-ins. I really do think we're going to see bank bail-ins because there's a lot of deregulating of the banks that are that's happening, right? Like Trump is spinning it like the deregulation of the banking industry is going to unlock this economic growth. And maybe it will in certain corners of it, but I think it's actually showing how dangerous and how risk off the government is trying to be with the banks. And think about it, like it all started with 2008 when they put in that law that they wouldn't bail out banks anymore. And then Trump comes into office talking about more deregulation, where he's going to abolish, the FDIC. So like if he gets rid of the FDIC, there's no insurance and the government doesn't need to back it or whatever. And there's not even that much money in there. I remember, 3 years ago, we were monitoring it and it was like 300 billion. And now it's like sitting at 126 billion and it's still declining. Repo market is declining as well. But at the same time that this is all happening, the government is now coming in and saying, look, we're not going to do this anymore. We're not going to cover these places anymore. We're not going to cover this. We're not going to cover that. We're not going to, no more bailouts. We're going to do the right thing. And they're doing the right thing because they know what's coming. And I really do feel like there's going to be a bank bail-in. If you guys heard, not even a couple months ago, like November and December, Bank of America was having fucking account problems. Like there's literally a bunch of banks right now that are having different problems with their checking accounts. Like people's money is just disappearing. Okay. And granted, maybe it reappears or whatever, but something's going on. Like these banks are showing really bad deficits and their profit margins. Like Warren Buffett dumped all his fucking shares of Bank of America as well. Like there's clearly something going to happen in regards to bank failure. And I think that's where we're headed. But who's going to cover the cost? Is the government going to bail out the banks again? I don't know. Are they going, or is it going to be a bank bail-in? I feel like we're more likely to see bank bail-ins than we are to see the other, because the government's answer to inflation right now is AI. The government's answer to inflation is not to be more productive, it's to cut costs in different places. See, typically in a healthy economy, the government would find ways for economic growth. But we're not looking for economic growth. We're not growing. We're actually showing the GDP is not doing very well. But what we are talking about is cheaper labor. That's what we're talking about. We're the cattle. That's what we're talking about, though. That's what the government's talking about. Their answer to inflation is to get rid of your job, not more economic growth. They want to get rid of your job. They want to get robots in your job. Think about all like the cashiers, real estate agents, analysts, telecom centers. All these, like, there's so many jobs that are going to go away. There's even bots that offer AI services for legal services. Like people could file different cases just through AI now. So, who knows how far they're going to take, how many jobs, like who knows how far they're going to take this and how many jobs are really going to be lost in the next 5 years. And we're not see, that's another thing. We're not talking about sometime in the future, 20 years from now. We're talking about like now. Between now and the next 5 years, we're going to see this. So what's going to happen? We're clearly in a recession. We're going into this depression-like state. The financial landscape looks like shit. The economy is tanking. The market's going to do good, but the economy is tanking. People are going to lose their jobs. And their jobs are going to be replaced by free labor. So what's going to happen to the lowest bracket of the population? It's going to be extreme poverty. And poverty kills people too. Poverty to me is another form of population control, because poverty kills people too. That's kind of what that's kind of what I see coming, because it's all about the reduction of labor cost at this point, because we can't fix inflation on products, right? Like there's nothing you could do to the product to make it cheaper. with inflation or with high inflation. There's no way to make the product cheaper. The only way to make the product cheaper is to create the product and deliver it at a cheaper cost, and that is going to be led by robots. So who knows what the ramifications are going to be as we go into the future on this. But that's just what I see coming. But I hope you guys like this live stream. I will catch you guys on the next one. I kind of want to talk about a variety of things today. I do want to start doing a little bit more streams because we're getting into season, and things are just going to start picking up now. But I don't want to mislead you guys. The financial landscape right now looks horrific, and we have to monitor so many different things. Like I've been telling people, monitor the repo market, monitor the stable coin capitalizations. Let's keep checking the bond market, keep watching the USD, keep watching gold. We need to take a look at all these indicators, because with gold on a bull run, basically gold going up as high as it is, it's showing fear. It's not that we're it's showing more fear than it's showing inflation growth. Like inflation is definitely growing the gold value per se. But it's not so much that, it's flight to safety as well. So, we're watching fear happen. There's a lot of fear in the market right now. And, I know the narrative right now is very bullish, but landscape wise, it doesn't look good. And it doesn't look good for the economy either, And granted, during recessions and during economic crashes is when the markets typically boom at the expense of the lower guys. So, just want to kind of give you guys every angle of what I'm looking at. Okay. But I will catch you guys on ODAP. It is available on Google and Apple stores. Don't forget, every Wednesday, 10 p.m. Eastern Standard Time, we will have a meeting, voice conference on ODAP, and then I'll go over economic forecast. Keep in mind, I will never hold a meeting that's worthless. If there's nothing new to report or there's nothing going on, we won't have a meeting. But if something is going on or if there's something to report, then yeah, I'll have a meeting. I don't know how many of you guys left corporate office yet, but I remember when I was working corporate office or working at capital firms, that it was fucking annoying to go to pointless meetings. So, as much as you guys love to hear from me or love to hear some of these rants, let's say, I really don't want to waste your time either, so I always want to make sure that you guys get exactly what you need, get the data that you need, and then you're out the back door. So that way you could do whatever you do in your real life. Finance should be a very easy, boring job. You know what I mean? It shouldn't be, like finance is not supposed to be fast paced. Investing is not supposed to be fast paced. If the person you're listening to creates a fast paced environment, you're getting rinsed. That's what's happening. You're being rinsed over and over again. Or maybe not you, but maybe the guy next to you is, or maybe, but there's rinsing going on. So, you should have a slow pace environment, very still, very slow. It shouldn't be a fast paced environment. If it's a fast paced environment, something's wrong. Yeah, technically all you needed to do was buy McDoubles in 2020. They're up 5x right now. But eggs are up 6x right now too, and they're going to be going higher. So all right, guys, I will catch you on the next one.